right. This was question, this is the question you attempted. It was question number 7, right?
7B, yes.
Okay. Now let's try party. See how we did there. Okay, so this is for item A. This category is for item A, and the rest is for item B. Right? For item A comes the antecedent point, item A, and then there is that for item B, right?
Yes.
Let's do item A, then write item B. Okay, right. And you know, when we do this, it's better to fix. You better fix the first row, the word item, right? It's better you fix it so that yeah, it shouldn't appear the top one, the top row, just like this. Okay, now let's go to our question.
Okay.
Judgment. Judgment time.
I'm hearing you with cast. Yeah, you are not clear.
I'm not clear until now.
Now you are okay, not that time.
Okay, I have to work on this. You know, it causes you problems. I have to work on this, really. This should be the last time. Okay. Now, this is question number
Okay.
7. It says the following details relate to two items of property, plant, and equipment, A and B, as we see them here, right? And then we are
Yes.
told they are owned by Delta, which are depreciated on a straight line basis with no estimated residual value. So you know their residual values are nil. Okay, you have the
Yes.
estimated useful life of right? The acquisition, 8 years, 6 years. We have the cost in $1,000, both from first year percentage 10. A lot of explanations, but down here we are told this is what we are required to do. Prepare the extracts from Delta statement of profit or loss for the years ended at the 31st March 2013 and 2014 in respect of the charges, the expenses related to property, plant, and what? Equipment, right?
Equipment.
Yes, so that's for profit and loss, profit or loss, but also for data statement of financial position is at the 1st March 2014 for carrying amount of property, plant, and equipment and the revaluation surplus. Okay, that's it. Right?
Yes.
Yes, now let's deal with that. Okay, just at a glance, I expect this is what you did, right? You know, when you are preparing the financial statements, you would have maybe some additional line items describing how PPE actually went from the beginning of the year to the end of what? Of the year, the additions, the disposals, yes, the depreciation, the revaluations, all sorts of things that happened, and you have to deal with them. But right now, our focus is on what? The revaluation. So on first of all, you look at the question. The year ends 31st March, right? 31st what? 31st March.
Yes.
If you look at this,
March.
it's 1st April. So it obviously starts 1st April. If it ends 31st March, it starts 1st April of the previous year, right? Yes. So
Yes.
for the first year, it should be from 1st April 2010 to 31st March 2011. That's the first year, right? Then for the second year, it should be
Yes.
1st April 2011 to 31st March 2012. And then for the third year,
Yes.
it should be 1st April 2012 to 31st March 2013, which is what
13.
has actually been asked. So from the
Yes.
question, we note that we need to get the extract 3 years from the date of what? From this date, right?
Yes.
Yes, the date of what? Okay, so obviously know that if you have the cost at the very beginning and here we have been told accumulated depreciation for what? For 2 years. You see now. So it looks like
Yes.
the year ended up to the year ended 31st March 2011 and 31st March 2012, depreciation has already been computed. So something already took place, right?
Yes.
Yes. Okay, so we are actually in. We even have the carrying amount at 31st March 2012. This is good.
12.
Yes, we already have it with us. So what we deal with is just from the current year, which is 1st April 2012 to 31st March 2013.
18.
Yes. So what we need to do is I'll just take this amount and then we have to depreciate them with what? As usual, and then proceed, right?
Yes.
But here we are told revaluation on 1st April now, 2012, the beginning of our new year that we want to deal with. We have the revalued amount at 160 and 112 for items A and B, respectively. And also we have the revised estimated remaining useful what? Life. 5 years?
Life.
5 years. Okay. So this is the point at which we'll have to do what? We'll have to start, right?
Okay.
So obviously you can see that we have to revalue this because we don't have to charge depreciation because depreciation has already been charged, right?
Yes.
So we have to revalue the asset. Okay. Let's see what
Yes.
it is. You had 180 here, and here it was 80 for item B, right? That is fine.
Yes.
We had the revalued amount of 160 and 112. Let's look at them. 160 here, revalued amount, and 112. So you have to get the revaluation gain and losses. Okay, so this was the loss, right? Because the revalued amount was less than the carrying amount, 20,000. This is good.
Yes.
Yeah, 80 and 112. This is what revaluation gain. And
Yes.
I do advise you, sometimes you should be doing this, right? If you have the 20 and you're using the spreadsheet to get matters right, do not just copy the figure. Did you do the math actually? You could just say maybe this, you could just say maybe the top one.
I was doing it using the calculator. Sorry. I
Okay.
was supposed to use the formula.
Yes, yes,
Sorry.
you have to get used. I'm telling you, because you have to get used even at work. If you can use
Okay.
Excel, then you should also be able to use this. So you have to,
Okay, I was supposed to do like
yes.
this minus this.
Uh-huh.
Okay.
Then you press enter.
Let me just
Yes,
do this one
exactly,
as well.
exactly. This is good.
Oh, sorry. I don't know why here there's already
There is okay.
okay, minus 80. Okay, perfect.
Okay, that's
Now
fine.
it's fine.
Okay, so we have the loss, but what is the what? The gain. But actually, there I see you have obtained them, you have computed them using just knowing you are the one who knows this is the loss and this is the gain. You have written where it's loss and what and gain. But usually you take the revalued amount minus the
Yes.
carrying amount and the negative sign will appear. But no worry, I hope you know what you are doing, right? It's fine. So this is the loss,
Yes.
20,000, and here you have 32 revaluation gain. This is good. Or you did the double entry right away. Okay, you just wanted
I
to.
just wanted you to see if it's correct.
Okay, that's good.
Yeah, concerning what you were explaining yesterday.
Okay, so for double entry, you say that my asset A, item A has dropped in value, right? And since an asset is a debit
Yes.
ledger, to drop it, you reverse the entry. So instead of debiting, you credit. This is well, very good. And then for the other side, it should be the revaluation loss, which should obviously go through profit or loss. Very good, right? 20, and this goes to retain the earnings. That's why whatever goes to profit or loss goes to retain the earnings. So there is even no need to start specifying. That's why they usually don't specify, right? And for this side here, it's
Okay.
a revaluation gain. So it shows that the asset has gone up in value. And so since the asset is a debit
Yes.
nature, you debit it. Very good. And on the credit side now, it's a revaluation gain, which goes to other comprehensive what? Income, OCI. You say,
Income. Oh, it's OCI. Sorry.
eh, okay,
Okay. Yes.
okay. So, After doing that, I think that's fine. You did very, very well, right? But now when you are doing
Okay.
in an exam, you can just write
Yes.
everything from top to bottom without writing the what entries, and you would just be knowing aside. Or when you
Okay.
want to do them aside, you do them, right? So that you can arrange it
Okay.
as a table from top to bottom. Okay. Then this was
Okay.
much. This was the revolution at the beginning of the what of the year, right?
Of the year.
Yes. So at the beginning of the
Yes.
year, we have 160. So if we do have 160 at the beginning of the year, we would have to charge what? Depreciation now, right?
Depreciation. Yes.
So let's look for the useful lives. The remaining useful lives, you have to use this one. Revise the estimated remaining useful life. I told you be careful about the word remaining. If they just said revise the estimated useful life, you would have to say, oh, how many years have passed? We had depreciated for 2 years already on this accumulated depreciation, right? Right?
Yes.
So I would have to take
Yes.
that if there's no way estimated, I would have to, maybe it was 7 years. I would have to say 7 - 2 to get 5 years. So be careful on that, right?
Okay.
Yes. So you have the remaining life of 5 years, and there are 5 years. So it's just normal. You would have to depreciate, and so you'd have to take as usual the cost, which is 160 minus residual value nil divided by 5, like we showed there. That is good. And then you have 52. And for item B, it should be
Okay.
112. Then the revalued amount minus scrap value nil or residual value nil divided by 5 again. So it's 22,400. That's good. Okay, now to have the carrying amount at the end of the year, we would have to deduct. So you deducted 32,000 from 160, and we had this 128, right?
Yes.
Okay, and then here you deducted 22,400 from 112,000, and you had this one. It's fine too. Okay, so until this point, we have
Okay.
the figure is at the end of the first year, right?
Yes.
Yeah, so that should be fine because what comes down here is subsequent expenditure capitalized on the 1st April 2013. This is the other year, right? The second year.
Yes.
Okay, so for the first year, it should be fine. Yes, should be fine. That
Okay.
when you go and prepare the extracts now, right? When you do prepare the what? The extracts,
Yes.
you have to show
Extracts.
it. Yes. By extract, it's like you are actually preparing the financial statements, but you are just dealing with particular line items, right? So you have to do it
Okay.
this way.
Okay.
Yes. Yes. As you can see, income statement, profit or loss extracts. You see, due to date, it has been written.
Okay.
Yes. So whatever
Yes.
item A, we had the revaluation loss, which went to profit or loss. So it's a revaluation what? Loss of how much?
Loss.
For 2013, you are doing 2013 first, 20,000, right? The revaluation gain,
Yes.
now you can, revaluation gain went to other comprehensive income. We should have written it down here, but the question did not want to specify anything on what? On revaluation, on other comprehensive income. It said in respect of charges or expenses, we are only dealing with expenses, right? Although, if we didn't say
Yes.
this, if we just wanted the income statement overall, we would have added a heading here, other comprehensive what? Income, and you would have said the
Income.
revaluation gain and put it there, right?
Okay.
Yes, but we haven't done it just because, okay, it hasn't been asked. And now you have to understand one thing now.
Okay.
That revaluation
Yes.
gain in other comprehensive income, I told you it goes to revaluation what? Surplus, right?
Surplus.
Okay,
Yes.
in the statement of financial position. That's why when you come to Roman 2 here, you find out that we have revaluation of item B on 1st April 2012, right? It was 32,000. Do you
Yes.
see it here? It is here is a revaluation what? Surplus, right? It is stated there with
Surplus.
revaluation surplus. Yes. So you have your 32 here. So this 32 in reality should also have been shown down here in the income statement, but the question did not want us to show the other comprehensive income, and that's why it is not shown. Okay.
Okay.
So that's good. That's why you can say, okay, that's fine.
Yes.
Now, and when we go to PPE, is PPE, right? Property, plant, and what? Property, plant, and
Equipment.
equipment. Yes.
Equipment.
Yes, you can see your figure now because if you go back here, we had two carrying amounts, right? We had the first one was 128, and the second one was what? 89,600.
89,600.
Yes, so you have to add them because you're going to show a single line item. So this one plus this one, we get
Okay.
217,600, right? Eh, eh, 217,600. So it should have been observed like that. 217,600, that's what
Okay.
we see here, right?
Why are we adding them?
Okay, when you do prepare the financial statements, for showing it's fine, you have done well. Remember, you are preparing the financial statements. You can have maybe even 100
Yes.
more non-current assets on PPE. So you can show one by one. You can show,
Okay.
yes, you can show them all. So someone who needs details would actually go to additional information or to the not to the
The
financial statement, and they would see there, right?
okay.
Yes,
Okay.
yes. So just add them for that purpose. This carrying amount, you can just add them.
Okay.
Yes, so to 17,6 what? 100. That way, and then
600.
it should be fine until that point.
Okay.
Until the point you have reached, that's what we will do, right? Because you no longer have any information. So you
Okay.
proceed. If you find anything else, for example, you can see down here we have this 6,400. Until now, you have seen nothing. So if you find it, no problem, you're still solving, you would include it, right?
Yes.
Yes, yes. Okay, so we go back to the question. Say what? That one could be some explanations given maybe after the question down. Or maybe you can just do this right away. You can see it not here, we would see, but no problem. You can just do this. This is just a note. It says Delta makes
Okay.
an annual transfer from its revaluation surplus to retained earnings in respect of excess what? Depreciation. Do you remember I told you yesterday about excess depreciation? I told you that
Yes.
if you
Yes.
revalue an asset upward, its value goes up. If its value goes up, it means the depreciation will go up. Going up of the depreciation is only going to show that the profit will be lower, right? The profit being
Yes.
lower, remember the profit goes to retained earnings. So retained earnings would be lower at the expense of the revaluation surplus going up, right? So it's like a trap.
Yes.
It's like a trap when we say that okay, these are just young children. Let them reduce their profit, but we are going to meet at the statement of financial position, right? So at the statement of financial position
Yes.
now, that excess depreciation we go and compensate. We go to revaluation surplus and tell him, okay, Mr. Revaluation surplus, what did you do? You made your profit lower, and so you made my retained earnings lower, and I just left you on the way. But now you're at the final point. I need back my what? My compensation. Right. Presume you
Okay.
presume as if
Yes.
retained earnings lend some money to what? To revaluation surplus. So revaluation surplus has to pay back, but albeit at no interest. So interest free loan. So revaluation surplus pays back. So
Okay.
if the revaluation again, let's say was 100 and use it like for 5 years, you divide and you get let's say 20, and when you reach at a statement of financial position, that 20 is returned each year, but that depends on the choice of the company on how to treat revaluation what surplus, right? Now the
Substance.
question tells
Okay.
us Delta makes an annual transfer from its revaluation surplus to retained earnings in respect of excess what? Depreciation. This has been
Depreciation.
specifically stated. Yes. So having said this is what we usually do. I told you that you come and take your revaluation again. It was for item B, revaluation item A had a loss. We don't do that for loss. We only do that for gain, revaluation gain, right? So
Okay. Okay.
how much do we have? we had the revaluation gain of 32,000, right? So you
Yes.
take your 32,000 and you divide it by the remaining useful life, which was 5, and you get 6,400. Right?
Okay.
Yes. So if you get 6,400, we say, okay,
400.
this is fine. If you have that figure, that's what we need to transfer each year from revaluation surplus to retained what? Retained earnings.
Surplus
Yes.
of
So that's what
earnings.
we'll be doing. Yes. So to do that, I you remove something from revaluation surplus, you take it to retained earnings. I told you that revaluation surplus is an item of equity. It is of a credit nature. So I will have to debit revaluation what? Surplus by
Surplus.
6,400. Yes. And then I would have to go
Okay.
and take this to retained earnings. 6,400. I have to credit it there.
100.
Yes. So that's why
Okay. Okay.
That's why we will have to go to revolution surplus and reduce it by 6,400. That's why if you come here,
400
yes, you can see it says transfer to retained what? Meaning 32,000 divided by 5,
earnings.
we have this 6,400 and it's done.
Okay.
Right. Yes.
400.
Yes. You see the way I did this
Okay.
working, yes, you can be doing the working like this. You just go all the way, and then you proceed. Right. Can you see like the way you did it? This way, right? Okay, then it's
Okay.
fine.
Yes.
Let's go to
Okay.
item A. I think we're not done with something on item A, right? Because we can see here, we also have
Yes.
additional things here, right? But this is for the other year
Yes.
now, yes. We are done with 2022, 2013. Now we go to the year ended 2014, right?
Uh, Sorry, on 2013, we still have this subsequent expenditure capitalized on 1st April.
Yes, no, listen. The year ends 1st April 20, 1st, 31st May,
Okay.
right?
Yes. Yes.
Yes,
I understand. Okay.
okay.
Yes.
Yes.
Yes. Yes.
So with the first
Okay.
year, yes,
Yes.
we are done. You have to watch the date. In case they added it
Yes.
if it was 31st March 2013, you would have to add without depreciating this figure. But this one is at the beginning of the next year.
Okay.
Yes.
Yes. Yes. I see now.
Okay.
Yes.
So what we are going to do here is at the beginning of the year now we would have for item A will remain as it is because it is nil, but for item B we'll have to add this 14,400, right?
Yes.
14,400. So it's fine. You did well. You had this figure here, and you added 14,400. You got 104. Very good. So this will be like the reinstated carrying amount, right?
Okay.
And whenever you do
Yes.
reinstate the carrying amount, you consider it as your cost, and they use the remaining useful life to get depreciation, right? Now, from this moment
Yes.
onward, I think everything will be fine because we have 104, and here we had 120 what? 28 as the carrying amount. The remaining life is 4 years
Yes.
now because we had 5 years and 1 year as a lapse. So what are we going to
That's
do?
good.
Get depreciation as usual, right? You did well here, 128 minus scrap value nil divided by remaining useful life 4, and we had 32,000. It's fine. And on this side,
Okay.
you did well too, divided by 4, it's fine, 26,000. Fine too. Oh, that's good. And then I think we can have the carrying amount after deducting what? Depreciation. So we say
Depreciation.
128 minus 32 is 96. This is fine. And here 104 minus 26, it is 78,000. It's fine too, right?
Okay.
Now we have to look on whatever happened after that. Whatever
Yes.
happened. Okay. At the end of that second year now, at the first March 2014, item A was still in use. Okay. So no, nothing to do.
Yes.
But item B was
Yes.
sold on that date for how much?
Actually, it's 70. I struggled because I wrote 70 million. I was like, okay, it's not possible. That time in Southlands, and then the selling price already 70 million.
The
Yeah,
selling
it's
price?
70,000. Yeah, it's 70 million.
Look here. You didn't look here. Look here. Look here. Look at the currencies. Can you see here? These dollars
Yes.
were in thousand dollars.
Okay.
Did you see here? These dollars are in thousand. For example, yeah, this is not 240,000. It's 240 million because we had the thousand up here, right? So
Ah,
yes,
okay.
yes. So you have
Okay.
to watch. So if this is 70 million,
Okay.
if we put it
Okay.
here, it would look like 70,000, but it is actually 70 what?
Yes.
Million. You saw that?
Million. Okay. 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 Thank you.
Okay.
Thank you so much.
Okay.
Okay.
Okay, so after this, you see that okay, item B was sold for how much? For 70 million. Then it's fine. If you sell
Yes.
something, you dispose it, right? You dispose of it. You compute the gain also on disposal. Do not treat those sales proceeds as revenue. That's not revenue. It's a sale. It's a what? Sales proceeds. That's what we call it, right? Do not go and add it
Okay.
to the revenue in your income statement. We call sales what? Proceeds. So you have to get the sales
Proceed.
proceeds. How did you get that sales proceeds? We sold it for how much? For say it was 70, right? So we'd say 70 minus that carrying amount, right?
Yes.
Carrying amount which was how much? 78. So we get the loss of how much?
78.
8.
Eight
Okay.
8,000 or 8
Okay.
million.
So that's what we have that loss. So that's why you find it this way now. For 2014, this is what we're going to do, right? First of all, as usual, we
Yes.
have the depreciation that is obvious for both items, right? You had
Yes.
computed them both, 32 here and here 26. If you do add them 22 and 50, 26, you have 58. That's fine. Loss on disposal. Whenever you get the gain or loss on disposal, it also goes to profit or loss, right? So this was the loss
Yes.
on disposal. So it's 8,000 here. You're done with it. In the statement of financial position, you remember you dispose of the asset. So its carrying amount is removed, right? So you need to understand everything. Loss
Yes.
of disposal equals to sales
Okay.
proceeds equals to sales proceeds minus what? Carrying amount. You need to know where each item in that formula goes. Loss on disposal comes to income statement here. It's fine as a profit in profit or loss.
Okay.
Sales proceed, that's the cash flow.
Okay.
Right. It's a cash flow if you receive cash. It should be in the statement of cash flow. So it
Yes.
won't look anywhere else, right? But the carrying amount, it
Okay.
means you have disposed it. It is no longer needed in your books, right? That's why if you
Okay.
come to 2014 here, we only remain with what? What? You have what?
Item A.
Item A.
Item A.
Yes, because we will have disposed the other item, right? You
Yes.
can see here,
Okay.
2026, you have disposed of this one, so it's actually no longer there. And then if you do that, you'd be done with with this income statement here. And then with the financial position, you have item A only. You have your evaluation, right? Do you remember?
Yes.
Do you remember what we had to do? At the end of 2013, we transferred.
Yes.
Let me remind something here. This was the annual what? You do the annual what? Transfer. At the end of each year, you transfer.
Transfer.
That's 6,400, right? So this is
Yes.
what you would have done. At the first year, you will have transferred how much? 6,400.
6,400.
Yes, from here you transferred it. See? So if you did transfer it, you would have remained with what? With this figure, right? 26, 25,600. Of course, this was for item B. We expected to transfer again, right? This year. But
Yes.
we have actually disposed it. So we remove it completely because it is no longer there in our books now, right?
Okay.
In case
Yes.
we still had it, we would have transferred again, right? But now you can do that. We are going to remove it altogether because it's no longer in our books.
Okay.
Get the point there? And usually when you do
Yes.
remove it, you can see why you did this. Since this is what has remained, instead of reducing 6,400, you remove it at all and you take it to retain the earnings. Right.
Okay.
That's why you can
Okay.
see this was the balance. Instead of saying you reduce 6,000 and take it to retain the earnings, no, you remove it at all. So take it all off and then take it in full to retain what? Earnings, instead of taking 6,400 each year because the item is no longer in our book.
In our books. Okay.
So that's all about this question. I think now we are ready to proceed with the next.
Yes.